Welcome, ladies and gentlemen, to a new edition of our online interview series here at Commodity TV. And we want to get today an update from Scott Eldridge, the CEO of Canagold Resources. Good morning to Canada. How are you, Scott?
I'm excellent today, Jochen. Good to be here. How are you?
All good. Thank you very much. Fine. And yeah, let's go directly into it. Canagold, I should also disclose I'm a shareholder of the company. And yeah, you guys had fantastic drill results on 26 January. I want to talk about, like, for example, 20.7 grams gold over 3.8 meters, 20.7 grams, 27 grams over almost 3 meters, 13.5 grams gold over 8 meters. So can you give us a bit context of those holes? What they delivered to you and why they were so important. And I think also the grades were much higher than the resource grade so far, right?
Yes, that's correct, Jochen. So this project's located in British Columbia, northwestern corner of the province. It is a brownfield site, past producing mine. We have a very high grade resource at 10 grams per ton. And the results that you're speaking of, Jochen, these are infill holes where, as of December 31st last year, we completed a 24,000 meter drill program spread over 47 holes. And including these most recent results, we've only released 22 out of the 47 holes. And that's primarily because the assay labs are very backed up in British Columbia with all the drilling activity that's been going on in British Columbia. So again, these are infill results, and these are confirmatory in terms of, yes, we expected this high grade nature, but there were some very pleasant surprises in these results, including visible gold. And up until this point, we had identified an area of visible gold, but we didn't think the VG was this sort of extensive within this particular area of the deposit, where we're now seeing VG 75 meters away from the original VG occurrences. And this is all post-mineralization relating to a felsic dike, but it looks like it's perhaps more widespread. In addition to that, this is also in the upper portion of the underground mine, where this particular section naturally falls within the PEA mine plan. Furthermore to that, it would be in the earlier part of the mine life, probably year 2 or year 3, where you're very excited about paying back the mill. So these will be higher grade stopes than the average for the deposit, where we're very enthusiastic about these results for sure.
Yeah, fully understood. And as you said, they are, let's say, a little bit closer to the surface in that sense. So probably it's also cheaper to mine and to make more money in the future.
Oh, absolutely. We have a mesothermal gold vein system, and you don't need to be a geologist to understand what that means. There's a lot of analogous deposits in the Red Lake camp of Ontario that were also mesothermal gold vein systems, just like our new Polaris project here in British Columbia. And the strong commonality between these types of deposits is the vertical depth that they can extend to. So our maximum depth of our current resources is only 600 meters, but it's fairly common that you would see these projects go for 1,000 or 2,000 meters below surface. And they're what's known in the industry as generational assets because of their potential longevity in terms of mine life. But you're totally correct. The higher you are to the surface, the less deep you have to go. It's just lower cost mining. And that's also reflected in the PEA we have on the project, where our all-in sustaining cost is the lowest quartile on the industry cost curve at $530 an ounce. So very healthy margin on this project.
Super. Yeah, and you said it already. On average, those grades are much higher than the 10 grams you have modeled so far in the resource. I would say if we take an average here, we are probably approximately 30-40% higher, which is great. Then I saw in your news, you touched already on it, infill holes, and this is like 20-25 meters spacing, the drilling. So that would mean also that you will then upgrade probably the inferred and indicated resources soon. What's the plan here, the time plan for you to do so? Because you still have 25 holes outstanding, right?
Yes, absolutely. So just to backtrack a bit, our current resource, all NI 43-101, it's split about 50-50 between inferred and indicated. So the indicated is fine to go into a feasibility study to become future proven and probable reserves. But we do need to upgrade the inferred, tightening up the spacings, as you said, from currently about 40 meters on the inferred down to sort of 20 to 22 range. And 22 out of these 47 holes have been focused on the infill side, as well as some step out holes that we can talk about where we're seeing expansion opportunities to make the resource perhaps bigger. But our real goal here is to convert, call it 80-90% or more of the inferred up to measured or indicated as we eventually prepare for a feasibility study later this year. And our average grade on the deposit here in the resource is 10.3 grams per ton. And we've already factored in a 20% mining dilution rate. So that represents head grade to the mill. And just to put that grade in context, if this were to go back in production again, this would be the 6th highest grade gold mine in Canada.
Wow, super. That sounds like a nice game plan, I would say. I know I am a shareholder. Fantastic. What other highlights do you think you can talk of in 2021? I mean, you drilled already a lot. You did a lot of work. Maybe you can summarize that shortly.
Absolutely. So we began drilling last May, 2 rigs on the site, and we completed 47 holes. Again, we've only assayed released 22 of those. And we decided just to keep the drills churning because of the excellent results and the momentum that we've been building up. So we kept the same 2 drills on the site for January, February, and we're drilling an additional 6,000 meters on top of that 24,000 meters, and none of those results have come out as well. So it's pretty much more the same this year compared to last year in terms of drilling. We recently did a financing that we did at 50 cents a premium to market that was structured as a flow-through raise. It was mostly taken by our current shareholders. We were oversubscribed, and that's kept us well financed to continue our drilling at the project. So as of today, there's still 2 rigs on the site. So plenty more news to come in addition to the pending results from the previous program.
Super. And you can use that all then for an upcoming feasibility study, as you said, by end of the year, hopefully.
Yeah, we just need to really focus here on the resource side of things right now. There's no point on doing a feasibility study if you're leaving, low-hanging fruit in the inferred category. So we're very concentrated here on moving that up to M&I. And our ultimate goal here is to deliver a mine plan come a fees that would deliver 100,000 ounces over 10 years, whereas our PEA right now shows 80,000 ounces over 8.5 years. And we just feel that's a very attractive production profile that the industry is looking for, particularly on the M&A side, institutional investors, analyst coverage. Everyone's looking for that magical 1 million ounces reserve, and we're not all that far away from that. So as a part of this drilling, Jochen, you're fully aware that we've been hitting parallel zones or on echelon veins where they're in proximity to the C-West main vein, which is host to the 1 million ounces. So again, we're seeing opportunities here for resource expansion in the C9 and the C10 veins that you've seen previous news releases on.
Okay, super, perfect. Have you already started, let's say, a process? What permitting do you need? Environmental studies, stuff like this? Because I think this goes parallel then, right? When you move forward.
Absolutely. These are parallel tracks. So as we prepare for a fees, we would commence the feasibility study probably the second half of this year. And our permitting, considering the stage that the project is at, is very well advanced. So for example, on the environmental side, we've already completed our 3 years of environmental baseline, which means that we can apply to the BC Ministry of Mines for our environmental permit this year. In addition to that, with any project in Canada, there's multiple stakeholders, including the First Nations group that's a part of our project. They hold 4 out of the 20 jobs at our site right now. It's a very positive relationship. As long as we do everything by the book, we have their full support. That's the Taku River First Nations Tlingit. In fact, they were just down in Vancouver for Roundup, so we had a chance to have lunch with them, and it's all very positive. They're looking for the economic benefits here, that not just for the band, but also for the town of Atlin, which does have higher unemployment rate. They're about 120 kilometers north of the project. So everything on the environmental permitting side, as well as the mine permitting side, is advancing on schedule, and we're fairly optimistic that we'll get the result that we're looking for in due course.
Super, perfect. Can you give us also, coming to an end here, an update on your other projects? I mean, I think you have optioned some, leased out, and this is a nice gameplay to have, like Fondaway Canyon, Lightning Tree, Princeton, Windfall Hills, etc. Because you are getting revenue from that stuff, right?
Absolutely. We almost have a hybrid project generator type business model where we happen to hold a lot of projects. We are very focused in terms of our time and attention on New Polaris. That's the only project we're drilling on. And with our other projects sitting in the portfolio, our strategy is why let them sit there and collect dust? Let's create shareholder value. And how do we do that? We option them out to other companies. And collectively, this portfolio brings us in cash as well as shares in these issuers, in addition to minimum annual property expenditures. And we always retain a royalty upside on these projects. But collectively, as a portfolio, it does pay our corporate G&A. So that means any money that we raise goes directly in the ground at New Polaris to move it forward.
Fantastic. That's how it should be. The G&A is paid. That's always good. Super. Great, Scott. Thank you very much for the update. So there is a lot coming up here. I would say still 25 holes. Then you do additional 6,000 meters. So yeah, we look forward to a lot of hopefully very good drill results.
Absolutely. So yeah, watch for those high grade results. You'll also see a release within the next 2 or 3 weeks explaining the relationship further with our First Nations group. So watch for that. And it'll be more drill results, more high grade. Exciting times here as we're sitting above $1,800 gold.
Super. That's what you want to have, exciting times. And I have a good feeling that gold goes higher, definitely. Not only those 18-15 today. Great. Scott, thank you very much. All the best. Please keep us posted. And yeah, we should talk then when you have another set of 5 or 10 holes released to see what's going on there.
Yes.
Great. Thank you very much. All the best to Canada. Bye-bye.
Thank you. Take care, Johan. Bye-bye.
You too. Yeah, ladies and gentlemen, that was Scott Eldridge, the CEO of Canagold Resources, and you heard it. The drills have turned from 47 holes, 22 were already released, so still 25 holes in the release here coming up in the next weeks and months. But they do additional 6,000 meters of drilling. The company is financed. They want to go in the second half into the feasibility mode here already and start preparation. So things look really good. New Polaris might be then the next 100,000 ounce producer per annum, and we look forward to keep you posted and updated, of course. Check out the company. The stock is honestly way too low, as other stocks are too, but this is really a bargain here. Check out the company. Thanks for watching us, and bye-bye from Switzerland.